Thanks for joining us on the Move IQ podcast with this First Home Focus series with advice for first-time buyers. I'm joined by Umera from Skipton Building Society, who are mortgage lenders and will be able to share what and why makes you eligible for a mortgage. So do stay tuned. This is important stuff. Umera, let's crack straight into it. What do lenders generally consider when it comes to assessing somebody's criteria?
Things like income versus affordability, so expenditure, credit commitments, credit score, so what does that look like overall, the amount that you're looking to borrow versus the amount that the property is worth.
What about area across the country? Are they at all interested in that, or the type of property?
Yeah, definitely. Good question. Things like geographical area or number of dependents. You might have children, elderly relatives that are dependent on you. Some of these things are also taken into consideration as a sort of well-rounded picture, if you will. Some of these things are actually built into like a lender's metrics. So they'll do some of these checks in the background, but some basic details from you to start off with is a good place.
And is it a case of you plug in they plug in all of your situation and it spits out yes or no? Or is there a bit more to it than that?
Yeah, there's actually a lot more to it, Phil. And I like that you've asked the question, because a lot of first-time buyers have this misconception that it's a computer says yes or no. And actually, there's a lot more work that goes on in the back. So there's some work that goes on in the metrics or algorithms that are built into lenders, websites, calculators. And outside of that, you will have a human that will look at your application, your circumstances as a whole, and really assess if it's the right thing for you and for them as well.
And as an applicant, can you talk to that human?
Absolutely, yeah. Okay. In the form of what we call a mortgage expert. So it could be a mortgage advisor who is directly linked to this particular lender. Outside of that, you can have what we call a mortgage broker, who will then have access to all sorts of different types of lenders at the same time. So, and I think these days actually it's so varied, because you can have access to things like web chats. Lenders have the option for you to kind of speak to somebody live on the website. You're able to go and sort of key some of these details in yourself, some of these basic details on an affordability calculator. And I believe actually that social media these days is a great place as well for education and kind of get some short, sharp pieces of information as well.
It sounds like a sort of silly question, but can you just highlight the importance of choosing the right mortgage to start with? Because it is a really important decision. Definitely,
agreed. I think it's a really important decision for today and for the future. Getting the right lender who offers the right level of service for you is really important. So everybody's circumstances are different, right? My circumstances are different to yours, and it would be different for every first-time buyer, depending on whether they're living with parents or whether you're renting at the moment. So I would say definitely pick a lender that's right for you and your circumstances.
But what about the right type of loan? Because there's a myriad of different types of loans and products.
Yeah, definitely. Again, this links into what your current circumstances are and perhaps what your priorities are in the future. So many first-time buyers that I've spoken to in my experience have different priorities in life going forward. Some first-time buyers are quite clear on what their kind of next 5 years are looking like. As an example, they might look to upsize, downsize in that time, start a family. And it's really important that the loan size, the type of product and the type of the mortgage that you're taking out can reflect that. And the best way to do that is to speak to an expert who can then guide you through it.
As you say, it's not a case of one size fits all.
Absolutely.
First-time buyers. Everyone is in their own unique circumstances. When somebody is about to apply for a mortgage, is there kind of preparation that they could be doing on their finances?
100%. So I think one of the key things that should be on the top of your radar is things like your credit report. So how healthy is my credit report? What's the history looking like in terms of keeping up with things like payments and financial commitments? Is it a well-rounded picture? And actually, is it a true reflection of what reality is? You'd be surprised how many people don't spot errors on the credit report. and then don't do anything about it. Right.
Okay.
But that is something that lenders also take into consideration.
Right.
The other thing is, and it's quite obvious, isn't it, is the planning ahead for your deposit, for your savings, and being really disciplined in kind of structuring what your income and expenditure looks like in order to try and do that. And then the last one, I know I keep saying this, but I can't specify how important it is to speak to a professional who can then guide you through some of that planning in the future.
Yeah, there's a lot at play.
Yeah.
If you're inexperienced, it really does help to have
definitely
have somebody on your behalf.
Yeah. On that note as well, sorry, before we move on the credit report, if you are somebody who has quite high financial commitments or debts in the background on things like cars on finance, credit reports, personal loans, it's really important to assess those to see where you can either, for example, start paying some of those debts down in order to reduce what we call your debt to loan ratio when it comes to applying for a mortgage.
Okay.
And probably try and stay away from taking anything new out at that point. So if you know that you're looking to purchase a property, take out a mortgage, it's probably not a great idea to start looking at brand new financial commitments in the background.
On that topic, what about timing of your application?
Yeah.
If there's going to be some changes in life, should you get it done before or wait until you've changed job or had a baby or whatever it is?
Yeah, it's absolute key, I think, the timing side of things. And now, depending on, for example, if you're employed, somebody who's got stable income versus somebody, let's say, who's self-employed, who projects higher income in the near future, it's really important to take some of these things into consideration because timing plays a really important part on increasing your chances of being approved for a mortgage first time round. Other things that we've talked about is things like your credit commitments in the background, as well as, I don't know, you're due to, let's say, a promotion in the future, which you know you're going to get a pay rise off the back of that.
Yeah.
Actually, is that going to increase your chances of borrowing more? Probably, yes, with some lenders. And so it's good to take a step back, kind of assess some of these things if there are any changes, and then time it in a way where you increase your chances to get a mortgage.
Just for an example, if, say, you work in a sales environment and you get a bonus at the end of the year, will a lender take that into account if you've had it for a few years?
Yes, absolutely. So we talk a little bit about financial history. So we talked about it on the credit report. So that's a reflection of keeping up with your general financial commitments, right? Outside of that, the stability of your income is just as important. And there's like this negative stigma where lenders really focus on kind of income going down. Have you got a chance of you being made redundant, or you're going to reduce your hours? But it's equally as important for lenders to understand what the positive impact on your income is going to look like, i.e. bonus. So what does the history look like and how much bonus are you anticipating going forward?
So they will take that into account.
Absolutely.
Good news. The size of your deposit, it's a big one for people, particularly nowadays. How important is that for your eligibility in a wider sense to get a mortgage?
Yeah, it definitely plays a big part, absolutely. The larger your deposit is, that essentially means that you will own more of the property, what we call an LTV or a loan to value, right? The more deposit that you have, the more room you have for a budget. That's the first thing. The second thing is it will actually determine what type of interest rate or loan to value bracket that you might be eligible for. So it's definitely one that lenders and also you as a first time buyer should take into consideration.
If you only have a small deposit, what options are there?
Well, actually, these days, you'd be surprised there's lenders on the high street that offer up to 100% mortgages on an LTV. So you don't need a deposit. I mean, terms and conditions will apply and you should always speak to the expert depending on which lender it is.
Yeah.
But some lenders offer, for example, 95% mortgage, which means you only need a 5% deposit. And that is really interesting space to be in for a first-time buyer, especially in today's world where I think things like, your gas, electric, general life really is really expensive, isn't it? So it makes, it takes away that strain of saving for longer and saving more for longer.
One to think about anyway. Any final thoughts for people considering these?
Do your research beforehand, plan ahead, use some different platforms in order to try and give you some of that support and speak to an expert.
You got it here. You heard it here first. Thanks so much, Umera.
Thank you, Phil.
Thanks for joining us on this episode of Move IQ's First Home Focus podcast. We hope you found our tips and advice helpful. And remember, home ownership may be closer than you think, and we are here to support you every step of the way. So please don't forget to subscribe, rate and review our podcast so you never miss an episode. Until next time.